All right, so gotten a lot of questions about the timing of options trades, and how do we come up with levels, entry levels for the upside and downside. And there's really no secret formula to it. It's pretty simple. Um, all we do is identify historical points of resistance and support and wait for confirmation above those levels or below those levels uh, before we enter a trade. So here's an example of Tesla, and here I'm just using a straight line tool, and I'm identifying these levels of resistance. So here and here, you can see that on July 20th or 21st or 20th, Tesla's price had moved to a certain point. Ignore the actual dollar value because this is before the stock split, but the price of Tesla had reached a point where the market decided to take profit, or maybe the value of the stock that the market did not agree with. Whatever the reason doesn't really matter to us. We just know that at this particular price, the market decided that Tesla couldn't go any higher. So this is a level of resistance, and you get more technical, but that's as simple as it gets, and really that's all you need for what we're doing. Here's another level here, and there's levels like this all over this chart, and you can go back many time frames. It doesn't matter. So we identify these levels of resistance, and we time our trades so that we enter them when we get confirmation above these levels. So what I'm looking for is, I'm always on this 5-minute time frame. I'm looking for one green candle above this level of resistance. The market opened here, and there's a small gap up, which was a signal that we should buy a call contract. It's important because, let's say we were watching the market on July 21st here, and we entered a call contract, or a trade with a call contract, hoping that we would get 10 or 20 points of movement to the upside. But for the next 2 weeks, the next 14 days or so, you can see Tesla clearly traded below this level, and in a range. And if you entered a call contract, Tesla's price was at 334, and we entered a 340 call contract. All we needed was 6 points of movement. We thought for sure we could get that. Maybe a little chance here to take profit, but for the most part, everything traded below our strike price. So for 14 days, we're watching our that particular position lose money because of time decay, because of theta. Every day that it got closer to the expiration, we lost a little value on that. And then then you have to make a decision whether or not you want to hold that contract, continue to hold that, or cut your losses. But to avoid that, we wait for confirmation above these levels. Here, going back to our example on August 17th, we got confirmation above the resistance, and we entered a call contract. In this case, let's use a 340 example again. We buy a week or 2 weeks on this contract. We're only looking to hold it for a very short period, and we're rewarded with a 40 or 50 point move to the upside. So we're going to hold until our next target, and the target was at 382. Now you can argue that hindsight's what it is, but this could be interpreted as a resistance level at 350, 359, 360 or so. And Probably if I actually enter this trade, I take profit here at 360. Um, but just looking back here, um, we would have gotten a pretty nice move either way. So what do you do with this information? You just write down these price levels. And then if you have like Thinkorswim or Fidelity, I think Webull, maybe Robinhood as well, you can place alerts in your trading platform. And once that price level is met, and then you have confirmation above, then you can enter with pretty good confidence that you're going to enter a trade where the underlying stock is going to have an upward move. And here's an example of the daily watch list we post on Green Rose Pro on Twitter with the entries for long and short. And make sure you check out our website with a tutorial on how to use alerts. So again, no secret formulas. These are basic concepts. Build your watch list, 15, 20 stocks that you watch on a daily, and wait for confirmation above your support or resistance levels before entering a trade, and it's high probability that you'll make profit.